Hey, what's going on? Welcome back to Dapper Dividends. I'm Russ. Dude, AT&T pays that sky-high 7% yield. Should you take a position in AT&T? Should you add more? Should you get out of it, dump it? What's going on with the dividend? We're going to take a little bit of a peek into that dividend. We're going to have ourselves a look-see and see if we can't give you a good answer on AT&T and that dividend. So yeah, AT&T is paying about a 7.25% yielding dividend, which is just sky high, one of the biggest of the large caps, maybe except for Altria, which I do also own Altria. Love them. But AT&T, they recently spun off DirecTV. I did a quick update video, which you can check out here when it happened. Now, I may have jumped the gun in saying that they're going to be distributing shares to the shareholders. I called AT&T and got the word from them. They said it hasn't been announced yet whether it's going to be a cash distribution or if shares will be issued of the new entity. So when I see new entity, that they're going to have a board, it has an enterprise value, all those metrics, that just tells me that they're going to be issuing shares. Quick recap, they did announce that they're spinning off DirecTV into a new entity, which will be 70% controlled by AT&T, and it will include DirecTV, Uverse, and AT&T, and that will happen in the second half of 2021. The deal is worth $16.3 billion, which is about 88% less than the $67 billion that they paid for it in 2015. They will receive about $7.6 billion in cash, and another $200 million in debt will be assumed by DirecTV. So AT&T will receive about $7.6 billion in cash, and another $200 million in debt will be retained by the new DirecTV entity. Now keep that $200 million in mind. We will be revisiting that later. And they will retain 70% majority ownership stake in the new entity. DirecTV became a non-core asset that was about 1/6 of revenue. If you look to the lower right, you will see just what a big loser that DirecTV was. The wireless phone subscribers, the fiber subscribers, and the HBO Max are all doing okay, but that was such a heavy dead weight on AT&T. Just check out those premium TV losses, which is where DirecTV resides. So total company sales in 2020 declined 5%, but that segment where DirecTV does live or reside dropped about 11%. As I've said before, it's going to be a slow, tough grind with AT&T. They're like the massive USS John C. Stennis aircraft carrier that I served aboard in the 90s. Now, when we wanted to turn that big old ship around, it didn't happen on a dime. It took a wide berth to get that going the other direction. I feel the same thing is happening with AT&T. You're just going to have to be patient, which is exactly in line with analysts expecting about 2% growth on earnings over the next 3 years, as you see by the chart. So they have been paying down debt since 2018, which is a massive step in the right direction because AT&T has a lot of debt. Now, the dividend is currently frozen, which means they have not increased it, but they have until fourth quarter of 2021 to increase the dividend to keep their aristocrat status, which means they have to raise for 25 consecutive years. And if they miss a year, they will lose that moniker of aristocrats. But honestly, I've said it before, if it means the overall health and well-being of the company, damn the moniker, damn the aristocrat. So there's still time to maintain that status, but if a freeze is what's needed to improve the overall health of the company, then I am strongly behind that. And the freeze is definitely a warning sign, and it's something that I don't take lightly. It shows that there are issues and they are aware of the issues, and we'll see if there's enough time for them to turn things around in order to give us that increase to 53 cents a share. This recent statement, the company does expect to have the financial flexibility in 2021 to continue to invest in growth areas, sustain the dividend at current levels, and focus on debt reduction. So that is what they are planning on doing, is reducing debt and investing. They've made a lot of bad investments. I still think HBO Max can be something big, and that's one of the things. On top of the 5G spectrum bidding that they just did win some of those contracts, which we'll cover in an upcoming video. But as you can see here, the company does expect $26 billion in free cash flow for 2021, which is plenty to cover that current dividend of about $15 billion annually. And as we see from this wonderful article I was reading by Intelligent Income, it's very interesting that if they do a 1% increase, then that will add about $285 million in increased costs. So remember that number from the beginning. I said that $200 million that DirecTV will be assuming. Well, there you go. That is almost the entirety of the cost of the increase from the dividend, which I think they can do. As you see from the slide, they also expect the payout ratio to be in the high 50 percentile. That is of free cash flow, not earnings per share. And I love looking at the free cash flow payout ratio as opposed to the earnings per share payout ratio because of all the financial engineering that can go into those EPS numbers. But speaking of ratios, one area of concern for me as a dividend growth investor is the interest coverage ratio. Now, not all debt is created equal. If you're using your debt in productive ventures that will bring back in excess of the interest on the debt, then that is basically good and healthy debt, in my opinion. So the interest coverage ratio is a number that shows us how many dollars of operating income are available to pay every $1 of interest expense. AT&T currently is at 3.18, which means they have $3.18 of operating income to cover every $1 of interest expense. That is uncomfortably low for me. I like to see at least 5 on the ICR because that gives us wiggle room. So if interest rates rise, then that means they're going to have to pay more money because their debt has become more expensive. And if they have some headwinds and they start bringing in less revenue affecting the operating income, then that's going to squeeze them into not being able to comfortably cover the interest on the debt. I think AT&T, we're going to see it chop sideways for quite some time. Remember, the big aircraft carrier takes a long time to turn around. AT&T is a massive company. It's not going to happen overnight. Patience will be required. So I'm hopefully optimistic that they will lift the freeze and they will give us our 53 cents by the end of 2021. But if they keep the freeze longer than that, or they have some semblance of a cut, I would not be surprised in the least. So I have my toes crossed and my fingers crossed that they will give us the raise. And as a long-term investor, I do think they are a great long-term buy. I will be keeping my eye on the interest coverage ratio and the free cash flow payout ratio. As long as it's in that high 50 percentile range, I'm very comfortable, and I don't think they're going to cut the dividend anytime soon. So my advice to myself, because I can't give you advice, would be to just continue buying and reinvesting the dividends and soaking up that wonderful and luscious 7.25% dividend yield. Follow me on Twitter at RustyRam78. Check me out on Instagram at Dapper Dividends. And I always say it and I mean it, that expertise does from the community. So please, we want to hear from you. Leave your comments in the comments below and comment where the comments go. And as always, this is not financial advice, but this is my thoughts and opinions. These are my thoughts and opinions shared for your fun and entertainment purposes only. Don't forget to like and leave a comment. Don't forget to comment. We want to hear from you. We want to speak to you, and I will speak to you in the next video.